Markets are moving fast, and who has time to read headlines all day? I know I don't. This is why I created Rushing, the first audio podcast that delivers simplified news for busy investors. This is made by a woman who trades and talks straight to the point. Hi, I'm Yuna, and in the next few minutes, you'll get what's moving the markets, why it matters, and where money's flowing. Everything is fast, smart, and reliable. Let's dive in.
First headline: soft inflation locks in Fed rate cut. What does it mean? September CPI cooled to 3%, slightly under forecasts. That pushed the probability of an October 28 to 29 rate cut to nearly 98%, with futures now pricing policy at 3.75 to 4%. Why magnify it? This confirms the Fed pivot narrative. Inflation is no longer the fight, employment is. A dovish pivot drives a powerful multiple expansion and liquidity tailwind for risk assets. Possible affected sectors: treasuries across the curve, rate-sensitive equities like tech and real estate, gold, small caps, and high-yield credit. Second headline: record highs. Wall Street's historic rally, what does it mean? The Dow blasted through 47,000 for the first time in history. The S&P 500 climbed past 6,800, and the Nasdaq topped 23,200 as AI and tech earnings powered the advance. Why magnify it? This isn't just a melt-up, it's a sentiment reset. Broader participation and easing fears are fueling one of the most inclusive rallies since 2019. But euphoria can turn fast once rate expectations meet reality. Possible affected sectors: index ETFs, growth tech, cyclicals, small caps, and active funds chasing performance. Third headline: AI chips dominate. Micron and Intel soar. What does it mean? Micron is up 140% year-to-date on explosive AI memory demand, while Intel returned to profitability backed by US subsidy support. CoreWeave announced rapid expansion of AI data infrastructure, driving bullish sentiment across the semiconductor space. Why magnify it? AI hardware is the backbone of this market. Surging capex and government subsidies give semiconductors a structural bid. But valuations are stretched, making this a momentum trade. Possible affected sectors: semiconductors, chip equipment, hyperscalers, cloud infrastructure, data center REITs, power and cooling suppliers. Fourth headline: Trump X7 summit confirmed. Trade tensions ease. What does it mean? The Trump-Xi meeting is officially set for South Korea. Tariff rhetoric has softened, and trade uncertainty is easing. Markets across Asia rallied on hopes of smoother US-China relations. Why magnify it? After months of export restrictions and tariff threats, a diplomatic thaw helps global supply chains breathe. Risk sentiment benefits, especially for multinational tech and exporters. Possible affected sectors: semiconductors, exporters, Asian equities, shipping, industrials, commodity currencies like the Aussie and Yuan pairs. Fifth headline: labor weakness secures dovish Fed pivot. What does it mean? Soft job data reinforced confidence that the Fed will cut rates again this month. Policymakers are now openly prioritizing employment stability over inflation management. Why magnify it? This is the final piece confirming the easing cycle. A weaker labor market supports lower yields, stronger equities, and risk rotation, but also hints at future growth slowdown. Possible affected sectors: bonds and rate-sensitive sectors, tech and growth equities, consumer discretionary, financials with yield curve exposure. That was your 3 to 5 minute brief. If this helps, the best free support is to subscribe, turn on notifications, and share it with one investor friend. Links to all socials and the written brief are in the description. See you in the next episode.